All right, good morning, everybody. Just give a minute here before we go live. All right, we are live. Let's go ahead and get started. All right, welcome everyone. My name is Nick Hiersche. I'm the president of the Mortgage Calculator. We are a lender that specializes in non-QM and alternative financing. And we are going to go through today our live rates with our sales manager, Jose Gonzalez. And today's topic, after we go over the live rates, will be on our first time home buyer programs. So a lot of great programs are out there for first time buyers, especially that qualify under special conditions, such as different income types. So we will check those out. But first, let's go ahead and get into the live rates for today. All right, this is our pricing tool for our team of professionals. We have over 300 loan officers licensed in 22 states for primary and second homes, which we're going to be talking about a lot today. And we can do our business purpose DSCR loans in pretty much every state. So we're going to go through a couple of scenarios today. If you would like a full loan estimate, please get with one of our team members. But we'll check out the general pricing indications. It is the 31st of March, just after 11 a.m. Eastern, so we have live pricing on all our basic programs. So we'll set up some general scenarios here. Nice, easy loan amount of $400,000, a LTV of 80%. That means 80% loan, 20% down payment. A desired price of 99. That means we'll tell the computer to try to find the best rate at one discount point in cost. That way we can find the best scenario because typically our customers are asking to buy down the rate a little bit there. We're going to compare our different loan types. We will do first our conforming conventional, then go to FHA, and then we'll check out our non-QM expanded guidelines options. And we do have VA and USDA available. VA is only for eligible veterans, so we won't do that live today. And USDA is only for properties in a USDA eligible area, so we won't go through that today. We're going to set everything as a purchase, 30-year fixed standard loan, primary, single family, Florida, Miami-Dade. And we will use an estimated FICO score of 760 and an estimated debt to income ratio of 40 for all our scenarios here. So let's go ahead and check out the rates this morning. So again, pretty much the same for this whole week. We're at a 6.5 rate for one discount point in cost and a final APR of 6.676. I believe it's been like that for the last 3 days, so not much volatility. Sometimes that's good news, right? The rates are staying steady pretty much all week. So if for any reason our customer doesn't qualify for conventional, typically the next option that we want to compare, we'll pull up the same scenario, but we'll switch to an FHA option. FHA does allow a little more leniency on the credit guidelines and the debt to income, but we'll keep everything the same for our scenario so we can compare our FHA rates. So looks like, again, same as it's been pretty much all week here. 5.625 rate for 1 discount point in cost for a final APR of 6.227. So pretty good options here. Notice the FHA is a little bit lower actually in the APR, even with the upfront mortgage insurance and monthly mortgage insurance, well, yearly paid monthly. However, the government has reduced those. So very reasonable APR. Definitely recommend all our buyers out there check out FHA, especially when Jose goes into these first-time buyer options. FHA is very comparable, where before it was sometimes a little bit more expensive. Now it's actually a little bit cheaper. Now, if for any reason our customer doesn't qualify for either program or maybe needs a little bit more income, most banks and lenders don't have any other options, but fortunately, we have over 5,000 loan programs under expanded guidelines here. So we will select that. That will be our non-QM loan programs. We'll keep everything else the same, except now we have a new option called income verification. So instead of using full documentation, 2 years of tax returns like conventional and FHA, we can select an alternative income documentation, 1-year-old doc, 2-year-old doc, asset related, business bank statements. We can do our investor DSCR for our investment properties. We'll do that here in a minute. But our most popular program by far for non-QM is going to be our personal bank statement 12-month program. And that's going to be for our self-employed borrowers. Typically, our self-employed borrowers with 2 years of tax returns have various write-offs, and for various other reasons, may not have as much income as they actually make. So in this case, we're going to use 12 months of their actual bank statements to determine a debt to income ratio, in this example of 40%. So we'll actually use their bank statements and their actual cash in the bank and their actual expenses to determine that debt to income ratio there. So let's check out what our non-QM rates are for bank statement programs this morning. So non-QM is always going to be a little bit higher in rate. In this example, our best combo here looks like a 7.5 rate for 0.875 discount points of cost for 7.543 APR. So a little bit higher APR there. Obviously, this would be for a customer who would not qualify or needs to qualify with more income to purchase the house that they would like to purchase. So a little bit higher APR, but very comparable. Definitely recommend our customers compare all three options. Now, before we go into Jose's examples, we always want to check out our live rates for investment properties. So we'll pull up the same scenario, 80% loan to value, 20% down payment. And this time we're going to compare our conventional investment property examples with our expanded guidelines, aka non-QM investment property examples. So first, let's check out our conforming examples. Everything else is going to stay the same. Let's check out the investment property rates. So the best option the computer found here is 6.875 rate for 3.5 discount points in cost, which is what we always highlight. The investment properties, unfortunately, they've added some price adjustments here, so we can't find any rate options for just 1 discount point in cost. But this is the best combo for the APR. You see the APR here of 7.135. Now, many of our investors would like an option with less discount points. They don't mind going up in rate, but in this case, there's no other options. Even if we go up in rate a little bit here, here's a good option, 7.49 rate for 2.625 discount points. That's still quite a bit of money in this example, $10,000 that an investor could deploy elsewhere. So that's why we love to offer our alternative options with our non-QM programs. So for our final example here on the live pricer, let's go ahead and pull up an 80 LTV loan. Go to expanded guidelines, aka non-QM, investment property, and now you see we have 2 new options we need to set here. First, we're going to choose our income verification, and our most popular program for non-QM investment properties is going to be our DSCR program. And that is because it doesn't actually require any income from the borrower. No employment, no income from the borrower. We're simply going to use the estimated rental income from the property in order to determine if that will cover the PITIA, the mortgage expenses for that property. So that is typically a ratio over 1, means the property rents will cover. We have a ton of options for DSCR programs for that, and even options for DSCR ratio under 1 where the rents don't quite cover the expenses. And our next option is prepayment penalty. We're always going to set 3 years as our standard. That is standard for a non-QM investment property. However, we can choose 0 if we prefer, and that will cost more money and limit our loan programs. We can also choose 5 years if we prefer. That will cost a little less money, but will have a little bit less programs. So we always choose 3 years, as that is the standard for our live show today. Now let's check out our DSCR rates this morning. So again, we love to see our DSCR rates in the 7s. Hasn't been like that for a while. So great option here, 7.99 for 0.725 discount points and costs, and a final APR of 8.028. So you remember the conventional examples were just over 7 APR, and these are just over 8 APR. So great options, very comparable. Definitely recommend our investors compare them side by side. Many times the DSCR is a great option because no employment, no income verification, and many times investors can do for example, a cash out on a couple of rental properties to then purchase a couple more rental properties. So very flexible loan programs here. And there's a ton of options that we have with different DSCR ratios. Like I gave an example of, this one allows ratios under 1, so a property that doesn't quite cash flow, and different prepayment terms and various options here. Some of these may allow short-term rental income, etc. So tons of options that we have here at the Mortgage Calculator. Please get with our team to find the one that best fits for you. So now we've gone through the live rates. Let's go ahead and do a deep dive example. So let me introduce our topic for today, and we will get into it. All right, so today Jose is going to go into a detailed example of a couple of first-time homebuyer loans. So a lot of great options that we have for first-time homebuyers. It does remove some barriers to entry, right? It does allow us some extra juice on LTVs and other things that we need that will help those first-time homebuyers. So Jose Gonzalez, our sales manager with 27 years of experience, helped many first-time homebuyers, obviously many multiple generations of first-time homebuyers over the years. So this is obviously something Jose loves to do. So go ahead and take it away, Jose.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Yes, Nick, that is correct. I think I'm like 3 generations deep now on some of the referrals that I'm getting for the first-time home buyers. But let's get into what is a first-time home buyer. Okay, a first-time home buyer is not literally somebody who's buying their first home ever in their life. A first-time home buyer is a borrower who has not owned a property in the last 3 years and is buying a property now. They could have sold a property 3 years and 1 day ago, and they would qualify now as a first-time home buyer. Obviously, first-time home buyers then cannot own any other properties, because then they would not be a first-time home buyer, regardless of if that property that they own has been rented forever. It's not their primary. This is not about not having a primary. This is about not owning any other property in your name. And that would be for any of the occupying borrowers and co-borrowers of the loan as well. Everybody has to fit the requirement if they're going to be a borrower on the loan whose credit and income is being used for qualification purposes. So very important to consider that. Now, there are a number of programs out there geared towards first-time home buyers. Some more restrictive than others. Most people, actually, when they think of first-time home buyer, are thinking about bond programs or other local municipal programs that are only available to first-time home buyers. Those are local options, very specific, and not as quickly doable as what we're going to discuss here. Those other options are ones that they have to apply for to those municipalities, do courses, get their approval from the course, and then wait for funding to be available for those programs before they can go about and try to get under contracts. And then those require secondary approvals from those municipal sources. So that's not what we're referring to here. What we're referring to here now on our first-time home buyer programs are the programs available offered by Fannie Mae and Freddie Mac, which are our two conventional loan sources for our conventional conforming loan, Fannie and Freddie, that only require 3% down for a one unit property and 5% down for a 2 to 4 unit property. So, and the example, first one that I have here, it is for a one unit first time home buyer with 3% down, 97% LTV. I will note the rates are lower than conventional by at least 0.5%. If you saw what Nick showed earlier on the conventional rates, and the mortgage insurance is also lower because the factor for the insurance is lower. So, two very big benefits to consider for this program as
Can
well.
you zoom in a little bit, Jose?
Sure. Sorry about that. Oh, wait a minute. Where's my zoom here? Don't think it's going to let me do that.
Yeah.
Here we go. Yes, I got it. Maybe that's a little too much, huh? Is that good there? Or
Yeah, much better.
All right. Thank you. So again, MI is lower and the interest rate is lower as well. And again, it is a 3% down program. Everyone always only thinks that FHA is the lowest down payment option, but if you can work it out, obviously DTI, FHA is 56.9. This is going to be maximum 49.99. But when you consider the benefits of this program over FHA, and by the way, FHA is not a first-time homebuyer program either. FHA is a primary home-only program. It's not for second homes. It's not for investment properties, but it is definitely not for a first-time homebuyer. And it doesn't put any restrictions on you not being able to own another home. There are some restrictions. If you're going to go FHA to FHA, there are requirements of distance and other documentation that has to be provided so that you can get an FHA to FHA loan. But this option is lower mortgage insurance, also lower down payment, and very competitive interest rate. So here you see in our first option, there's a lender credit of $1,188. And actually, the lender credit, I'm going to show you in another example. The lender credit is available all the way up to 6.625 rate and almost $5,000. So if you are dealing with the borrower that's really tight on the funds to close, you have almost $5,000 extra that you're going to be able to provide in lender credit at a little bit higher rate that could really assist that borrower if they're short the rest of the money that they may need. So here you can see that we can go all the way down to 5.5% rate, which is a very good option. So this is for, standard cookie cutter one unit, right? But now here we have some outside the box options that you may not have considered were even available for a conventional loan, because here we have a 2-unit first-time home buyer purchase, a duplex with 5% down, conventional. If you were buying this as a primary and not first-time home buyer, your down payment would be substantially higher. So here we're looking at the same rates and the same cost. There is not an add-on for property type. So here, the 2-unit property, same rates as the 1-unit. The only difference, there is obviously a difference, is that it's 95% loan to value. In other words, 5% down instead of the 3% down that is available with the 1-unit property. So keeps getting better because now we have our 3-unit. And again, you see the rates, same amazing rates. This is for a triplex, right? A 3-unit property. Live in one, rent the other 2, probably get most of your loan payment paid for. This is every buyer's dream. And now the 4 unit with only 5% down. Again, our ultimate house hack that we always like to talk about, buying that primary property, living in 1 unit, renting the other three. And in this example, I did go all the way to the highest rate that gave the highest possible lender credit. So you have $4,655 lender credit. That's almost a full 1% lender credit with 5% down. Very good option. Rates are the same for the 1 to 4 unit again. Only difference is 2 to 4 units. It's max 95% LTV. Many of you may not have been aware of this, so make note when you do have that first time buyer, you're pre approving them for a property. They haven't chosen anything yet. You should let them know, give them all the options, give them the 3% down option for a 1 unit and give them the 5% down option for a 2 to 4 unit. They may not have considered it. Their realtor probably doesn't know about it, but you do. And it is your duty to offer all the options possible to your borrower, because they're only going to get one chance to be able to buy, to do this kind of a purchase, is when they don't own any other properties, when they can buy that 4 unit as a primary residence. So really good option here. And now I'm going to show you the refinance option. There is not a cash out refinance option with this program. I mean, this program is obviously has some subsidies involved there to be able to have that lower MI and the lower interest rate. So it's really not geared towards cashing out. So cash out transactions are not possible using a first-time home buyer program. However, rate and term transactions are possible and are treated exactly like the purchase option. The same loan to value, 97% loan to value on a 1 unit maximum, and 95% loan to value on a 2 to 4 unit maximum. The rates are exactly the same as you saw on the purchase. So we're looking there. Look at that good lender credit available at 6.625. If your customer wants to save a little bit there you go. Or if they just want the lowest rate, you can buy it all the way down to 5.5% at a cost a little bit above 2 points. So amazing options here for your first time home buyers. I hope that some of you have gained some additional insight here on the 2 to 4 unit purchases that are possible with only 5% down for first time home buyers with amazing rates and super low MI. So this is the ultimate house hack, and I really feel that most of you will be able to capture additional business offering this to your first time home buyers and those first time home buyers that are out there listening to us right now. I hope that this has allowed you to consider additional options for your purchase, because remember, this may be your only chance to be able to buy this type of property that as you grow, then it'll become a rental property, and then you move on to your nice single family home and you'll have an investment 4 unit property there that will serve you for many years to come.
Alrighty, thank you, sir. Let's go ahead and wrap it up. I don't see any questions in the chat. If you guys have any questions, you can reach us at info@themortgagecalculator.com. If you guys have any questions about anything, and we'd be happy to help. We have over 300 loan officers licensed in 22 states for these first-time homebuyer primary home loans. So please get with us. We'd be happy to do a quick quote, as Jose explained there, and get you into your first home. So thanks for joining us today, and thank you, Jose. And we'll check back in on Monday morning with live rates for Monday. Thanks, everybody.
Thank you, everybody.